Hello, folks. This is going to be a market recap video for January 23rd, 2025. And I'm also going to talk about daily bias a little bit and what made me be bullish for today. Okay. All right. So let's get into it. Okay. So this is the S&P 500. This is the Nasdaq or the US 100 CFDs. This is the weekly chart. So I'm going to primarily refer to the Nasdaq here and only refer to the to S&P for S&Ts and stuff. Okay, so on the weekly chart, we have an order block right here. That's an ICT bullish order block. Okay, and then you see all of this price action right here. You see how there's no imbalances. So that to me is a clear signal that it's gonna take a lot for price to go from here to there. Okay, because there's no imbalances to rebalance. So first off, that's the first thing that ticked in my mind when I looked at the weekly chart is that look at this choppy price action. Well, it's going to take a lot for price to get down there. And also we had this bullish order block right there. Okay. Price did not trade into it. Well, we did trade into the wick. I personally look for a trade in the body of the candle, but that's fine also. Okay, let's go to the daily chart. Okay, so on the daily chart, we have an SMT from that low to this low. It's the same thing that's marked here and there. Okay. So that's a bullish SMT. And obviously this is lower time frame. So notice how I did not use the SMTs on the weekly chart because they're just too big. And you can't time the weekly chart SMT, okay, in your intraday trades. So this is the daily chart, and if you watched my last video, I told you guys that, that was the drawn liquidity. We hit that right there. Boom, done and dusted. And then I told you we were gonna be bullish, and guess what? Out of the 8 days, we've been bullish for 5 days. That's not bad, is it? Anyways, also I'm bullish for Friday, also for tomorrow. That's my drawn liquidity. ES already hit that. I'm sorry. That's the same high, I think. Oh, it's not. Okay. Anyways, so ES already hit that target today, but the Nasdaq's gonna do it tomorrow. And don't think of this as a bearish SMT. We're still gonna go up to those highs. Okay. And I'll explain that why in another video because that's too big of a topic. But right now, let's focus on today. Okay, so this is the 4 hour chart. Nothing much. Every day you see that, Wednesday, we rally up overnight, and at 10, okay, that's the 1 p.m. candle. So we hit down, we hit the fair value gap, we rally up again. Okay, so it's the same thing. We go up, we come down, take support, rally up. All right. And I assume we're gonna do the same thing for Friday. It might be different, so don't be blinded by it. Don't be a pattern trader. Let's go to the 15-minute chart now. Okay. Okay, I'm gonna show you my trades for today also later after I'm done covering all the topics I want to in this video. And then, yeah, you can see what I did for myself today. Okay, so this right here is the S&P and, sorry, the Nasdaq. And right there, 9 a.m., 9:30. Let's go to a lower time frame so I can see this better. All right. So these are the trades I took. I can show you the executions. 1 second. Okay. These are the trades I took today. So this one was a winner. This one was a loser, but I'm happy with the trades I took. And it doesn't matter to me because these are paper trades. And my bias, which was bullish, proved to be right. See that? That's what matters. Okay. And I saw a lot of people on Twitter saying that, the market's so choppy, Trump's gonna change the algorithm, and stuff like that. But all of that, that's bullshit. Okay, that is how I'd put it. the algorithm is not going to change because it cannot be changed. Okay, and a lot of people who are not qualified to talk about the algorithm, who don't even understand what an algorithm means, talk about it, and they think they're some kind of gurus when they're absolutely not, and they don't even understand the concepts they use. Okay, so I'm gonna talk about how even in this choppy price action, I got that trade, and then obviously I got stopped out on this. If I had a bigger stop, it would have hit, obviously, but I try to keep my losses small. Anyways, so the first trade right here. So this right here is the first presented fair value gap. Oops. Okay, this right here is the first presented fair value gap. Okay, right there. And you will normally see that this fair value gap is respected very much and is referred to by the algorithm a lot of times throughout the day. Okay, now it was right here, and I saw that the candles. So this wick, see how it respected the fair value gap? Like it did let the wick go that below the gap, and right here the candle was being respected. The candle respected the gap. So I saw that and I instantly entered right there. Okay. Spread made me go enter here, but my entry was exactly when this candle closed. Okay, and then I saw this right here, and I was like, you know what? This looks like a real choppy thing to me. Okay, because once it did this, it should have run. Okay, but it did not run. So what I did was I was like, okay, let's just target these highs, and I targeted those highs, and see it's right there. I sold it at those highs, and spread is obviously not a trader's best friend, but it's all right. And yeah, so that's the biggest confluence, right? I would have held this trade to the close of day, but I saw these deep retracements, and I was like, you know what? Let's just not do that. And I proved to be right. Okay. All right. This right here, this is a 15-minute imbalance. Okay. You see getting respected, but that is not important at all because it's just random. Okay. There's a real importance in deciphering what is random and what is actually algorithmic. Okay. Anyways, so this trade right here, I took this right before my class, and um, I thought I was getting in I thought I was getting in at a good price because where's the 8:30 price? Okay, let me just mark that out right there. That's the 8:30 open. Okay, so I bought below the 8:30 open, which means institutionally I bought in a discount. Okay, but obviously you see I got stopped out right there because I was trying to have a short stop loss. I couldn't manage the trade, all that stuff, but that doesn't matter. Okay, because if I had like what a 15 point stop loss, I would have caught this entire move. Okay, and then right about here, a lot of people started saying, "Oh, this is so choppy. ICT concepts don't work anymore." Stuff like that. And this is where you gotta stop listening to other people. Okay, so anyways, so the market rioted up, and then Trump. Well, let me mark that out. So at 11 a.m., Trump started a speech. Okay, so that right there is when Trump started talking. Now, to a normal retail trader, what does this look like? Consolidation, high, low, high, low, high, low. Okay, but do you see what's happening here? These candles are respecting that red line. Okay, notice how every candle respects it. It does not close below it. Only the wicks are allowed to go down. Okay, and what is that line? It's this line right here. I suspect that's a 5 minutes change in state of delivery. Let me just double check. Um, no, it's just a high. Okay, never mind. Anyways, so point is, why was price respecting this? What is special about this line? Okay, so ICT talked about this, and I'm gonna rephrase it. and restate it. Anytime you have a dealing range like this, okay, and we don't clear the low, see how we don't sweep the low, and we continue higher. Every time we do that, this entire piece of price action becomes a balanced price range. Okay, that right there is real important. You need to know this stuff. So what does that mean? That means the price is gonna come. The price can come back to it to get more support and fill more orders by institutions, but it's not allowed to close in there. Okay, it cannot close a candle body in there. If it does, it has to get out real quick. But ideally, it should not close any candle bodies inside of the balanced price range. Okay, this is all the 1 minute chart, by the way. There's a reason we're on the 1 minute chart and not a 30-second or a 2 minute chart. Okay, so right about here, this was a beautiful long opportunity. Okay, because price came down into the balanced price range, and it hit what? It hit the first presented fair value gap right there. See that? This was a beautiful buy. Okay, but I was in class and I was busy. I did call it out live to my in Estes Discord. He's a great guy. Check out his YouTube channel. Lots of free stuff, lots of good stuff. And join the Discord. It's in the video description. Okay. So I called it out live when this was happening. Actually, I think we were right here, around here, and I was like, oh, look at this, guys. This is a balanced price range. What does that mean? Price is gonna come back into it and go up. Okay? Go check the Discord. You'll find it there. You'll find my messages. Anyways, so price light up, right up. It got to this point. What time is that? 11:46. Let's look at what happened at 11:46 here in ES. Okay. Okay, that's a 15-minute chart. Let's go to the 1 minute chart and reset chart view. And 11:46. Where would that be? Right there. Okay. So ES, right there. That's the 11:46 mark. And guess what? That was the drawn liquidity. Okay, why is this line all messed up? Let me just fix this. Right there. Let me just zoom in a little bit. Okay, this is fine. Alright, so let's go to 11:46. Right there, see that? ES did not go to the drawn liquidity. Does that change my bias? Because it missed my drawn liquidity by 2 handles. Does that change anything? Absolutely not. Your bias should not change any bit until your drawn liquidity is hit. Okay, so 11:46. By the way, on NQ we were far away from the drawn liquidity. Okay, that high right there is the same high that ES made right there. Okay, so we were lagging real bad in NQ. All right, so at 11:46, right there, we topped and then we came down. We started coming down. Does this panic? Does this create panic? Should you be panicked when you see this big black candle or red candle, whatever you want to call it? This candle is 20, 25 handles, no 30 handles. Sorry. Yeah, this candle is 27 handles or something like that. Okay. So this might look like a reversal to a lot of retail traders because their EMAs are all going mad, crazy. They're like, oh shit, we're going down now. But what is it? What is the algorithm really doing? Where does it bring price down to? Notice this time it brings it into the BPR, hits the first presented fair value gap once again, and you see this consolidation? There right there is institutional order flow. Institutions like hedge funds, banks, quant firms, whatever, they're all longing this, okay? Retail traders, they're trying to short on a breakout. And smart money is longing this. So every time a retail trader sells, smart money is buying that position. And then, so basically what I'm trying to say is the algorithm is basically bringing price back to discount. So, smart money can buy more. And we do that. And guess what? Where do we go? right to the John liquidity on ES, obviously. There was a big SMT, a big bearish SMT between ES and NQ. But so obviously we didn't hit that high on NQ. But yeah, okay, that's another one of my recommendations. If you see this big of a lag, and so just let's say ES hits your John liquidity, okay, so just instantly get out of your position on NQ because NQ is not gonna go there if it's that far away from going from it, right? Let's go to the 5-minute chart now. Okay, so the thing is, a lot of people that I know, like Tangent Trades or Sherman Trades or Dodgy, okay? All these people, they're great guys, okay? They're great traders and they're probably better traders than me. Not probably, they are better traders than me, most definitely. But they don't get, but I'm not gonna name the guy, but one of these people, they said that NQ price action is real choppy / the algorithm is probably changing and stuff like that. Well, to me, nothing's changed. It's just more choppy. It's just unclear, but the precision, the elements of precision are still there. Okay, look at this. Trump was talking through all of this. You'd assume that he might say something stupid, or not stupid. I'm sorry. He might say something that makes the markets go down and go up. So this is like a bad area to take any trades in, right? But look at this. That right there is an algorithmic signature. It is saying, it is tipping its hand to you. It is saying, I'm gonna go up. This is my signal to you. I hit that fair value gap and the balanced price range, which I'm not gonna violate. And once it did that and it returns to it, that's your buy signal right there. And if you're actually institutional minded, you long this. The more it comes down, the more you long. Okay. Your bias should not change until your John liquidity is hit. Notice how, look at my Twitter and go to my Discord. I'm sorry, not my Discord, S2's Discord, but look at all my messages inside of it. I might lose a trade, but my bias is never wrong. Okay? And because I'm paper trading at the moment, that is what keeps me in the game. Okay? Because it's not that I'm clueless about what the markets are doing. This right here, this was an impulse buy because I had class and I was thinking, oh, okay, let's buy because I'm bullish and let's just buy. But there's no SMT here. We didn't sweep that liquidity, which I should have waited for when I was right there. But I just longed this. Okay, that is not good. But guess what? My bias for the day was correct. Okay, we were bullish, and I should have longed ES and not NQ. But it felt to me that NQ was slightly bullish compared to ES in the morning, but that was obviously wrong. Why did this happen? I have no idea. I have no idea what makes one asset lag and one asset boom. But all right, that's it for today. I'll see you guys in the next video.